Good afternoon. This is Chris Robinson, Robinson Ag Marketing. With today's Post Grain and Livestock comments for Monday, the 24th. Well, it's going to be a short week, obviously. Uh, Major trade today. Remember, December is off the board, really, but Friday is going to be first notice day for December. So the options are off the board, but the futures are still going to trading. So you don't want to be generally don't want to be trading the delivery month if you can help it. March corn, a 5 cent range, finished down a 3/4 cent, 4.36 and 3/4. January beans, about a 13 cent range from 16 to 31. We finished down at 23, down 1 3/4 cent. There were some headlines today about nothing substantial. Obviously, anytime there's a tweet, the market will react. Um, I still think that the market's digesting, the rally that we had from October 1st till last week's high, last Tuesday's high. We rallied $1.57. Now we've given back about 25% of that. Are we going to give back more? I don't know, but it feels like it's already been baked in. It feels like possibly the Chinese uh, bought the board versus buying in the cash market because we still have not seen any cash moves. There was a 130,000 metric ton sale today, but that's not enough to give us what we need for them to honor their commitment, which was supposedly 12 million by the end of the year. They've got a little bit less than two, so they got 10 more to go. I think that they've possibly gone ahead and bought it on the board. That's probably one reason we rallied $1.57 after October 1st. But I could be wrong. We'll see what happens. We don't have any good data with commitment to traders. We won't have any good data for commitment to traders till probably another 2 or 3 weeks. Why does that matter? Well, it's nice to know which way the money's bet. I would just say, just from 30 years of doing this, they're probably long 70, 80, 90,000 soybeans. They're probably short about 70,000 corn, probably about 65,000 wheat. And that's kind of where they're sitting. And my guess is that they're short across the board the entire protein complex after being long the whole way up. We'll get to that in a second. Talk about the protein complex today. Again, jam beans down 1 3/4 cent, 11.23 1/4. March Chicago wheat down a nickel, 5.34 3/4. Basically, we've given back 60% of the rally that we had. We did enjoy a 50, but I think it was a 52-cent rally, which gave us 4 month highs. We've given back 35 of that. So wheat, corn, anytime you get these rallies, and if you're long, if you expect commodities to trade like stocks, they don't. Okay, we haven't had that type of thing. The only market we've had like that, which was a great trending market, was the cattle market. Certainly over the last 10 months. But even look what happened there. I mean, just it took 6 months to rally $1.10, and in 5 weeks we gave back 70% of the rally. And now we're going to see. We finished the lock limit down today in both fats and feeders. The deferreds and fats came off limit a little bit today. June popped a little bit. Looked like you might see people buy some June and August, the deferred fats, but those finished today down a little bit as well, down 7.25. March feeders down 9.25. We really opened up. We opened up at limit down, and never came off limit in the March feeder. So is there more to go? I think so. I mean, we've taken out the big $3 level now. If you look at my letter I wrote this morning and sent it out, it looks like we're going to be playing the go find the old low game, which if you look at charts, you'll see there's probably another $10 before we really get to some sort of support there in the feeder cattle. The same thing for fat cattle. We're going to be playing find the old low, which will stop this bloodbath. I know that everybody's going to be blaming the funds for the sell-off, but they were also 90% of the reason we had the tremendous rally that we had in the last 10 months. So live by the sword, die by the sword. And hogs, the only green thing on the board today, they managed a little bit higher. Dees up 40 cents. April up $1.20, 1.225. This is coming off, a big correction, 4 month low. Are you going to see a spread where people continue to buy hogs and sell cattle. I don't know. If I'm looking at April cattle, I really can't get excited about anything until we start getting north of 84 to 86 cents. There's a lot of congestion back there. But after a break that we've had, from 94 to sub 82, we traded as low as actually 81.10. So we just broke 13 bucks. Can we rally back seven? Sure we can. So again, that's why we roll down our puts. If you're working with me, anyhow, we'll roll them down because I don't want to put that we paid 3 cents for that's all of a sudden worth 7 or 8 cents, and they're holding it. I don't want to see that 8 cent put go worthless. So what we did is we rolled those puts down, replace them with a cheaper put. And are you getting 100% of the roll down? No. If you get 70, 80%, you're doing a good job. But you're also not getting margin calls when this thing rips higher. So if you're short the board, you cap your profits and you meet margin calls. If you use the puts, you don't get margin calls and you get 70 to 80% payoff on the flush unless you hold it into expiration. So there's no perfect gold standard for hedging out there. Obviously, if you knew where the highs were and you knew where the lows were, why would you even farm, right? You would just sit on a boat and trade. So since we don't have that type of information, at least I don't, you have to hedge. All right, that's it. 312-638-8868. Give me a call. I'm watching crude oil as well. Crude oil is under 60 bucks, trading right around 58 bucks. If we take out 55, that's going to be big. That's going to be a 5-year low. I keep watching crude oil out there to see what happens there longer term. Like I said, this is going to be a short holiday week. Generally, that's going to be some thin and choppy trade. Okay, guys, have a good night. This is Chris. Take care.